All right, check, radio check. Want to thank everybody for taking time out of their day to join us. My name is Chris Lester. I'm going to be your presenter today. Sort of as a refresher, we have been doing these calls since COVID started. We have started to present financial topics every week for the most part for almost 2 years now. And, we've gotten great feedback, and we try and circulate through the content to be able to share with you things that are relevant to you and that are going on in the environment. So typically we don't talk or promote a lot about products, but sometimes in the financial industry, there's just no choice. The only way to understand how products or strategies work is to actually spotlight them or highlight them. So today, all of us, I would think on this call, have heard of Gerber, right? Gerber baby food growing up, we've all seen it. It's all been part of our lives. And they, over the years, have created for children an ability for families to protect themselves. So without further ado, what I'm going to do is take us through a few slides that could, sort of highlight why this might be something you may be wanting to do for somebody in your family or share it with somebody you know. So without further ado, what is the Grow-Up Plan? So the first language, this first line is permanent whole life insurance. And you may recall from past presentations I've done, whole life means permanent insurance. It means just like home ownership, right? We own the home. Now you may have a mortgage initially, but typically the goal is to get to the end line where you actually own the policy versus renting. Term insurance, which most people tend to have through their work or employer, you don't own it. And then if you have a separation of service, if you end up leaving your employer for whatever reason, trying to convert that to permanent insurance can usually be quite expensive. Now, what's unique about this strategy is it will protect children, newborns, 14 days to 14 years old. And why is that relevant? Well, I mentioned Caitlin on my call. She's my right-hand lady, office manager, and she is a mother. She's a proud mother of her newborn, Zoe, but she's also a mother of two of Zoe's older sisters as well. So 3 children. And she started thinking, hey, we hope nothing ever happens to our children. But what if something does, which is the purpose of insurance? So she had run across something on Gerber and wanted to know, can we offer this? And so we did a little bit of investigation throughout our distribution channels and found out, yes, in fact, we can do that. So there's some things that we want to point out that, the coverage lasts a lifetime. It's not just while they're a child. Eventually, a parent or a grandparent, we're going to get into that, could purchase that for their child or their grandchild. And then they have the opportunity where that could double in value during once the child reaches 18 and then transfers ownership to the child at age 21. It does build cash value, and it helps the student build financial foundation. Now, that last part I want to point out, because before I got into the financial services arena, when I got out of the Navy, I was full of energy and going to slay the world. And I was looking around as to what I was going to do for the rest of my life. And I came across that I wanted my first car. My first car was a red Trans Am. Now, my dad was willing to co-sign for me, but I had to come up with some of the money. And I didn't have any money. I didn't. So what he said is, hey, I bought this policy when you first were born. And if you want to cash that in to put towards your car, you can do so. And I did that. And that allowed me to step into my first car. And I got that hot Trans Am, of which I got a few tickets along the way. So the Gerber Life Grow-Up Plan gives a parent and a grandparent a way to provide the gift of guaranteed, key word there, guaranteed life insurance protection to children from 14 days to 14 years old, while helping them to build that strong financial foundation. Premiums are designed to be budget friendly. And unlike many of the competitors to Gerber, coverage doubles in value during age 18, right, without any increases to premiums. You could do something today where it might be seemingly not seem like a lot, but it could blossom into something a little bit more at age 18. So coverage amounts range from 10,000 to 50,000. And how does the doubling of coverage work? The coverage amount automatically doubles at age 18 with no additional premium. So let's just say you were able to pick up the max amount of 50,000 right now. You decided you wanted to do that for a child or a grandchild. At age 18, it automatically will double to 100,000. So the adult purchasing the policy is the owner until that child reaches age 21, at which time the child becomes the owner. Is there a medical exam required? There are no medical exams required, but there are one or maybe two questions. You can actually, if you have, let's say in Caitlin's case, she has 3 children, but let's say you're from a larger family, you can put 6 children on an application. Now there's multiple premiums for that, obviously. So it's not just, okay, well, each of them get, the 10,000 or 20,000 or 30,000. Each of them will have their own separate premium, but it is on one application, right? If the child is greater than 1 year old, there's only one health question. But if that child is under 1 year old, there are 2 health questions, and that's just to prevent any adverse risk. So will the premiums ever increase? The short answer is no. That's why whole life is offered, and it's the guarantees that are offered by an A-rated company. So the policy will remain in force. Premiums are guaranteed not to increase, and the cash value and death benefits are guaranteed as long as the premiums are paid on time and within the grace period specified in the policy. The cash value and the death benefit will reduce to any policy loans. So if you do, for whatever reason, in my case, I cancel the policy, but let's just say I borrowed the money out. Well, if you borrowed the money out, you're not borrowing the money from the insurance contract. You're actually borrowing from the insurer, Gerber in this case, and they charge 8%. Now, that is, considering today's environment, expensive money. So that's why it would probably be one of the last places to go to. But let's say that interest rates in the future go to 15 or 16%. Well, then you might want to borrow that money out and go put it in a CD down at the bank. All right. So how do we take advantage of the policy's cash value? A lot of parents and grandparents refer to this as a nest egg that accumulates over time. Basically, you're able to start to help the student get a leg up. And I just had a client email me before this call just saying, hey, listen, we're thinking about saving money for our granddaughter's college. Would this be a vehicle? It depends, right? There's pros and cons with every place that we save money, especially for college. The rules are changing. So what more is the policy owner until you reach it, until 21, so you can borrow against the cash value. So if, let's just say, a grandparent was turning around, putting money into this, and let's just say, for argument's sake, you had $5,000 or $10,000 in a policy here, and the student or the child was not 21 yet, that you could go in and borrow that money. You're the owner. You get to use that cash or do whatever you want to with that contract as you see fit. There's something called the guaranteed purchase option. And I thought this was pretty interesting, right? That basically the child, the insured child as a policy owner has 4 opportunities to buy additional insurance at certain ages and life events without proof of insurability. That could be key. So here you're helping them to get a leg up, and you go, okay, I did 50, it doubled to 100. And then at 25 or 30, 35 or 40, right, that they could turn around and that could go up to as much as $400,000, getting this additional coverage without having to provide any evidence of insurability. Now, when we're younger, we typically think we're healthy and we will never have an issue. But, in my career, 30 years, I've seen people come into my office that were, 25, 28, 30 years old and had, bouts with cancer, had bouts of serious ailments that, make them uninsurable. So, it does happen. We don't want to think about this stuff. Sometimes it's a little depressing, but, this is a way to sort of have peace of mind. All right. So I put this slide here because I think sometimes just at the end of the day, I don't know what it's going to cost for your specific circumstances. So I just picked a number. I said, you know what, let's say that your grandchild is 4 and you wanted to do $50,000, right? So let's just think about some math, right? $40 a month is roughly $500 a year. $500 a year for 10 years is $5,000. So you put $5,000 into this policy, they're 14, and they got $50,000 of coverage. right? So when you think about it, that they've turned around and at some point in time, you're like, okay, I've helped them start to bank some money for their future, whether they choose to keep the death benefit or whether they choose to utilize the cash for their own needs. That's something that you can have that discussion with them at age 21. But to me, it just seems to me, I do know that we're going to do our call next week on something called the beneficiary liquidity plan. And I was doing some homework to find out what is the average cost here in New Jersey. And right now, to bury somebody in New Jersey is about $15,000. So, if a tragedy were to strike, and now you had to come up with cash, this at least, like, we're not doing this to get rich. We're doing this just to make sure that a tragic event is just a little bit easier should something happen. Why Gerber? For more than 50 years. Like I say, we all grew up Gerber baby food. I'm certain my mom fed it to me. I don't recall, but I do know that when my kids were growing up, that was one of the things, our go-tos on the shelf in the grocery store. So, a lot of companies, when they're in, different industries, will expand, GE or Gerber, or a lot of these companies will step into the financial services arena. Well, they have done a great job, because to get an A rating with AM Best means that they have the financial wherewithal to weather pretty much any storm. And remember, life insurance, health insurance, any insurance products are regulated by the state in which they are issued. So New Jersey, New York, California, the toughest states in the union, right? So you just understand that if they got an A rating, that means that they have proven their financial stability, and you can be comfortable that it will be there should you need it. How's this work? Well, you know what? I said to Caitlin, since this was something that was on your radar, she can do this. Both Keith and Caitlin are licensed in my office, but Caitlin, because this is close and dear to her heart, can help you with this. If you got questions, if you want to write this, if you want to get a quote, if you want to put something in place for either a child, a grandchild, whatever, right? Reach out. There's her email address, Caitlin@professionalplanningservices.com. There's our office phone number. We're here to help, and we're going to post this on, we're going to have this as a YouTube video. It's being live streamed right now on LinkedIn. You know what? You just don't know, but it's nothing that's going to break the bank to give you peace of mind. And I would just give you a suggestion to give Caitlin a call. Here's our disclosures from RIA, Retirement Wealth Advisors. And with that, this just says that, hey, listen, I didn't make up any of this stuff. This is all, Met compliance. We've run all this stuff through. And then lastly, if you have any questions for me, right, there's my email address, my phone number. I'm here to help, folks. And we really do appreciate you being on this call every week. If I can help you or answer any questions, please reach out. And, we hope all's well. And I hope you join us next week, because like I said, next week is going to be the beneficiary liquidity plan. And that will talk about a guaranteed issue life insurance policy that you don't need a death certificate to put in place. So folks, have a great day. Look forward to speaking and talking to all of you, and bye-bye.